Good day, everyone. All right, so I just want to go over some local price action here. Um, Depending on the time frame you're trading, there's some really interesting ideas. I'll go over near, I'll go over Bitcoin. There's certainly some scalping opportunities here, and there has been. But I want to go over this because, again, it's just a perfect example of some of these trade concepts working. Okay, so first we have this an initial a failure, an initial reaction. Now we came back down through this level we swing failure to the 786 retracement locally, and altcoins love the 786 both locally and on higher time frames. But so you have this, and then you have this is the 15-minute chart, another rally, a little 15-minute bar paying off this level, a nice impulse. So when you're looking to long something like near here, you really want to be getting in on the swing failure, either the initial reaction, initial retrace on a low time frame, initial back test, or here you can see we came down and we back tested this level again perfectly. So when you're looking at trading a swing failure, I get a lot of comments from people like, how do you know to take the position? How do you know that level is going to hold? The fact is you don't know. And so what I want to make clear is when you identify these reactions and these swing failures, this is a technical setup. So you're trying to get this entry on a back test, on a reaction, on a retracement, and you just have your stop loss. You just accept the risk. Okay? You don't know what's going to happen. You can use some order flow to put things in your favor, but ultimately you're accepting the risk, and so you have a stop loss under this wick. If you get on this backtest entry, that's 1% away. And instead of second guessing yourself and trying to figure out how you can possibly know what's going to happen, you cannot. You're just taking a technical setup. Okay? So this is, you're happy to get this entry with the 1% risk. Probably get a nice take profit here. Set your stop loss entry. You should feel confident based on your risk management to be taking a position like this. Wow, I get a great entry. I got the back test of the level we swing failure. I have 1% risk. And from there, you don't care what happens. If we break down and get stopped out, oh well, I'll just look for the next setup. If you get a rally, you get a take profit. These are really nice setups, and they oftentimes can lead to nice reversals. So, that's what you're looking for on these entries. Um, Obviously, we have on the same token the same ideas to the upside, right? So we can pull fibs from this high and this high. So we can see this is the pivot 786, similar 786 here, and this would be the pivot 618. So you have these overlapping fibs. You can take these key pivots. This is going to be resistance. Does it mean that we're going to go to zero if we reject? No, this is just how price action moves. Okay, so, a lot of times people, their complaints when it comes to analysis will be that they don't like that style of analysis because they don't want to have a position where the price is going up and down and up and down. They just want something where price goes straight up. But this analysis is just analyzing how price moves. It moves between these key retracement levels. Do you know what's going to happen? No, you know that why do you take profits? Well, you're likely to get some resistance, right? And a rejection. And maybe, so this ends up being where we reject and we get a back test. If you were interested in scalping this short, you very well could. You could come into here and you could say, from this pivot high, it's the 786, from this pivot high, it's the 618. Maybe we've swing failured this high, and maybe use that as your entry. This is your stop loss. And maybe you're just aiming for a back test of the swing failure. You say, well, we haven't gotten one. I still have my long. I'm going to scalp a short here at the same time. Take those profits. I've taken profits on my longs maybe up here as well. And I'm compounding my position. And the reason I'm sharing this is because this very concept will play out over and over and over again in everything. And so what you can do is just pull your levels, right? When you have a position, and you just need to do that. It's not hard. It doesn't take a lot of time, and you don't always get your levels, but you set take profits. You set your stop loss to entry. If you're interested in hedging short, taking a short, you look for these types of setups. You don't look to short here, even locally. You don't look to long here. You look to long at this support idea forming. You look to take your shorts here, and even if you longed here and you put your stop loss here, it's not that that trade might work out and you don't get stopped out. But the problem is people are waiting for this elusive idea of confirmation. So they're saying, well, I don't want to long here because it's so bearish and I want confirmation. But then so they long here, okay, I have confirmation, but now they're back down here. And this will happen over and over again because confirmation is this ethereal idea that doesn't really exist. Oftentimes confirmation means you'll be longing either local or high time frame resistance. And so what you're looking to do is long support and just use risk management. Great position. Reaction, swing failure. I took this long here. I'm happy to do that. I was thinking about adding here, but I did not because I hadn't had profits off my initial position. But yeah, I set some limit orders, take some profits. I did not trade these, but I would have. And would I consider trading this? Well, I would consider trading a swing failure. I'd even consider trading a swing failure of this low, right? And I just use risk management. So you're always trying to put the odds in your favor, but at some point you have to take the position and accept the risk. And if you want to trade support, it's always going to look scary because you're counter trading the direction of price into support, right? So anyways, these are just local ideas on near, but watch for this. When I share these types of ideas over and over again, you'll see these are repeating ideas in the market. So now let's head over to Bitcoin. All right, so a couple little local ideas. I did notice we have this trend line, obviously, maybe backtesting as resistance, but we've washed through it a few times. So is it so relevant? Maybe not. But same thing here, okay? We put in this high. So we have this pivot high to this pivot low, because this is high to low for resistance. We come through, we swing failure these highs into the 786. We get a rejection. We come down and we retest these lows. So we kind of double bottom them. We get a rally, and again, now we're retesting this new local resistance from this new pivot high to this low at the 618, and we push up into the 618. I'm not saying you have to scalp these. What I'm pointing out is that this is how price moves over and over again. So you're expecting some kind of reaction. You have the swing failure. You're expecting some kind of reaction. It could be a local reaction. It could be a bigger reaction. And now, it seems to me, more likely than not, we have this big point of control, right? We've talked about it a lot. Here, resistance. Here, we backtested as support. It's been shifting around, but this is the latest pull because it shifts with volume. I will point out it's not a very defined point of control. This area and this area are almost equal. But we have this big level below us. So when this setup comes, if it comes, it does look like we're driving towards it. And if we bounce off the point of control and we reclaim this low, how do you know what price is going to do? You do not. This is a technical setup, but if you get a strong reaction off strong volume, you have very tight invalidation. Okay, so 0.5% away. And you just have to ask yourself, am I willing to risk 0.5% for this idea? Of maybe getting a major position off the point of control. Is the risk reward worth it? If the answer is yes, then you just take the trade. Same thing here. I took a couple trades, right? I took this long, and my question is, am I willing to take the idea of taking these little consolidation lows? I shared that setup. Am I willing to risk this for an impulse? Same thing with this swing failure. Am I willing to risk literally 0.04% of a stop loss, 0.03, maybe less, take it here even, for the idea of impulsing to the top of the range? And the answer is yes. And I could take this trade five times and lose it 5 times, targeting to the highs of the range. And some of these positions will break out, right? So you're taking profits. And you can take this position a lot of times. It could lose a lot of times, and you would still be profitable. And you just want to use risk management. But the great thing about these types of positions is they actually have high win rates. So they have high risk reward and high win rates. You can't really get any better than that, right? I like swing failures because they're the strongest type of reaction you can get at resistance or support, where you see all that volume come in and a rejection, and they give you the tightest invalidation. And what that means when you have tight invalidation is you can take a bigger size and maintain your risk management. So, there might be some positions where you say, well, I'm going to open a swing long in this range, but my stop needs to be under, let's say, this low. So you have a swing long and your stop loss is 10%, 12% away. Well, that means you have to take a pretty small position. Maybe 10% of your account size to maintain your 1 to 2% risk. Whereas here, you could take a 2x position size 2x to your entire trading account and maintain 1% risk, okay? Or 1.5, 1.4. So that's why these setups are so great. Now, you don't want to trade them with 100x because on your entire account balance, because that means if you take one loss, a 1% move, a 0.7% move, you blow up your entire account, right? So you're just looking to when you're looking to thrive in this market, you're looking for these high win rate trades with high risk reward, and you just take them over and over and over again. You don't get into this trap of trying to long confirmation or whatever that looks like. You're looking for the technical setup. You're being patient. You're understanding where the liquidity is in the market, and you just take the position. And if you take a stop loss, move on, right? Just a losing trade is not a bad trade if it was taken with invalidation and for good technical reasons. You're going a losing trade, a small losing trade, risk management, that's the cost of doing business as a trader. You're not going to win every trade. You need to overcome that fear of taking a losing trade, and you do that by using risk management. And if you say, well, I don't want to use risk management, then you're not going to succeed as a trader, right? You have to use it. And you'd be surprised, even with a small account, if you duplicate successful trades like this over and over and over again, you can build your account even starting with a small amount of capital. And the only way to do it is with risk management. So, yeah, and I've gotten lots of questions along this vein. Somebody on Twitter said, I need to see you live trading because I need to see how you take an entry. And I say, well, I'd take it like everybody else. I set my position size, my stop loss, and I say buy market. And he's saying, but how do you know to take that position? It's a technical setup. But how do you know that you won't get stopped out? I don't. I'm accepting that I could get stopped out because I've seen this stuff happen in the market over and over and over and over and over again. I already know it's a high probability trade. So if I do it 100 times, I'm very likely to make money. And my downside risk is very small. The odds I lose 10 trades like this in a row are very low. And my risk reward could even compensate often for losing 10 trades in a row. So anyways, I don't know what to title this video. I just wanted to go over some of these ideas. My ideas are still the same, right? Obviously, we have a range. Anytime a range is forming, you're just looking for these local retracements. You want to pull a volume profile. If you're interested in trading that range, scalp trading, you just want to be taking your profits within the range. You can leave some of the position running. You just can't open, let's just say a short here with a target at 10K, right? You're in a local range, so your profit targets need to be local. Your stop losses need to be local. You can trade this swing failure, but your first take profit shouldn't be at 25K. It should be at the lows of the range. If you're long in the lows of the range, you have take profits in the middle, take profits in the high, and you can leave some of the position running. So anyways, I don't like to share constant trade ideas in scalping. I do like to do updates just to show you guys, hey, look, these ideas are playing out over and over and over again. You'll see them on all these assets, on all time frames. And if you're looking for good entries, you want to be identifying key retracements to the upside for shorts, key retracements to the downside, whatever time frame you're trading, whether you're trading a range on the daily chart, a range on the 15-minute chart, and you're looking for those nice reactions. So anyways, hopefully this video is helpful. If we break down these levels, well, then you're just looking to cut your position. You want to find invalidation. So let's just go over where would invalidation be off this point of control. Okay, I'll do that really quickly. I want to mark this point of control out really quick. So let's just say you take the trade off of the point of control. I think most people won't do that. You'd be better off to maybe wait for this, and then you have invalidation both under the point of control and based on a swing failure technical setup, where you have a new low, you've reclaimed this level, and now you can just put your stop loss under the low. If you just want to open a position on the point of control, well, then you might need to be, you don't have that invalidation level because you don't have the reaction yet. You might need to be putting your stop under this pivot or this pivot. Probably, honestly, under this one. But the problem with that is, if we break down the point of control, it's more likely that price is driving into that liquidity. But it's fine. You know, you can. That's still a perfectly reasonable setup. Let me go into here. So what that setup would look like this. You have about 1.8% stop loss. And if you're trading the point of control like that, your idea is to be targeting the highs of the range, maybe taking these highs. So you can take profits along the way, but you have a major support level. And you're putting your stop under there. But my sense is if we break down the point of control, we're probably going towards this liquidity. And either we swing failure or we break it down. All right. Hopefully, this video should be helpful for you guys, because, you know, it's just reminding us that these ideas are working on all time frames. If you're sitting and you're looking for positions, these are the kinds of things you want to be looking for.